Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 19th of September. Starting off with the FTSE 100, which has had a triple bounce, or more than a triple bounce in the last week or so, off a rising 50-day line. That's around 82.40. Just looking for an end-of-day close above that May resistance line there at 83.40 to give us a potential push not only to the 8400 level, which is basically the post-May resistance and record highs, but also up to 86.70 and the top of that rising trend channel from this time last year. On the downside, we've got the floor of the channel there, 82.20, which we're hoping we'll never have to test it again, and then the floor of that channel from May, 82.25. But the way things are looking with the RSI bounce off neutral 50 as a leading indicator on the upside, and in fact also an uptrend line in the RSI window, we are really looking for this market to break higher through 8400 and beyond. Early and end of day close back below 82.20, really questioning the recovery scenario. Moving on to the DAX, and obviously this market probably also helped by the interest rate cut yesterday in the US, rising 50-day line, rising trend channel there from October, and we've closed above the 18,700 level of the gap down that we had, the top of the gap down that we had at the beginning of the month. Above 18,700, not only looking for 19,000 and the best levels of the year and ever, but also the top of that rising trend channel towards 20,000, hoping for that by the end of next month. Only back below 18,200, really delaying the upside scenario. Maybe we get another rug pull like we had back in August. Onto the Dow, and this is clearly the star of the show. Doesn't behave like it, or it didn't behave like it, but obviously anticipating the Fed move in recent days. But at least while we're on the right side of the 41,500 area, looking for the top of that channel there from September last year, as high as 42,800 or even 900 by the end of next month, or hopefully much sooner than that. In terms of support, the obvious area is the old July resistance line now, support 40,700, and we've got the 50-day line at 40,500 just below it, so that would be the support area if we have to fall back. Moving on to Bitcoin, which was making tentatively positive noises in recent days, and that push through the 50-day line there, 59,800, suggests that we should have at least a retest of the 65,000 area from late August, and then hopefully up to the top of that falling trend channel from February at 68,000. But unless that's broken, we are still in consolidation mode and in a range of around $16,000, between 52,000 and 68,000. In the near term, that 50-day line really the support point for this market. We had an RSI bounce off neutral 50, and obviously that's paying off at the moment. Moving on to gold, which was looking a bit tentative at the higher levels, but we're nearly back above, well, back towards the 2600 level. Still looking at the top of that channel there from December, as high as 2670 to be hit over coming weeks, hopefully by the end of next month. And no price action now, back below 2560, which was basically the August resistance for this market. Moving on to the stocks, and starting off with Avacta, where it looks as though whoever was short of the stock was able to cover their position via Deutsche Bank, which is obviously very, very nice of them to do that. And so the buyback really there from 55 to 65 or so in place at the moment. Looking for this market to stay above yesterday's support, 62 pence, and then hopefully head towards at least the 50 and 200-day moving averages around 70 or 71 pence, and ideally back to the top of the range there at 76 pence. But still a bit difficult with the 50 and 200-day lines still falling and the RSI below neutral 50. So there is a risk of the stock failing at 67 pence, which was the initial September support, and then having to retest the uptrend line there from July at 57 pence. But at the moment, looking rather better than it was just 48 hours ago with the rug pull that we had. Moving on to a stock which I hardly ever cover, and nobody else think covers either, which is Argentex. But here, a nice little turnaround there with the key reversal up yesterday and follow through today, and a rising 50-day line. A rising 50-day line near the lows tends to be the bottom of the market for a stock, and hopefully above that 50-day line at 34 pence. We're heading to the top of that rising trend channel, 47 pence as soon as the end of next month. But it just looks as though the bears caught out there on that particular situation, and the RSI now well above neutral 50 at 58. On to Capex, which was one of the stars of the summer, and maybe will try and rehabilitate itself now for the autumn. Key reversal up yesterday, which suggests that a few people were caught short below 0.2 pence, and above that looking for the 50-day line around 0.3 pence over the next week or so. Can't quite see whether there was a gap there, but it looks as though there was a gap there, unpulled gap to the upside today, so it's a bear trap gap reversal, and those are normally quite reliable, at least for a little bit of positive momentum over the next day or two. Moving on to Capricorn Energy, which I've never looked at, and here possibility of a rising trend channel base. So we've got rising 50 and 200-day lines there as well. Bear trap rebound from below the 50-day line at 208, and above that the initial target, the top of that channel there from back in February at £2.47. Above that, we're confident enough to even be thinking of a move towards £3 maybe by the end of next month, but need to spend as much time as possible above £2.20, which I suppose would be the end of day close stop loss at the moment. On to Empire Metals, which has had some news of late, and here it looks as though after the fourth or fifth time of trying, we've got the shares back on the right side of 7p. 7p looks as though, or 6 3/4 of 7p looks as though it's the support for the shares, and above that band then looking for 9 pence, hopefully by the end of this month at the 200-day moving average. Onto mobile streams, where we know that the company does not have any requirement for funding, and therefore the rise can be enjoyed. We bounced off the old target there, 0.09, let's call it. Still looking for a retest or a test of the 0.12 area, and if we can get through that, then the ultimate target here, maybe as soon as the end of next month, up to 0.19. And that resistance line projection from back in October last year. We've already had what looks like a golden cross there a week or two ago, so the good momentum there for the shares at the moment. Moving on to Neo, which has also been finding support at its old resistance, our old target there at 1.2 pence, and obviously we're right back at the IPO price at 1.25 pence at the moment. Maybe one or two people deciding to get out just before the next leg up, which is obviously a typical thing to happen, but above 1.2 on an end of day close basis, looking for at least a retest of the 1.8 pence level that we saw last month, and hopefully that will happen by the end of next month. On to Optibiotics, which is not a positive situation at the moment. Rather bleak looking chart there. A horrible bull trap there through the 30 pence level. Things obviously look rather good then, but the current situation is that we do have a support line projection there down to 12 3/4 pence, so maybe that is where the shares will head, and maybe if you're a fan of the shares, you might look at that zone as a potential accumulation zone for the stock. But at the moment, as I said, looking not great. Moving along to a rather better situation, which is Petra Resources, and here you can see that we've briefly hit our previous target there, the red line, around 1.35. In fact, we hit it almost on the nose. We've come back from that, but above the recent resistance around a penny, we're still looking for the shares to head up to that 1.35 area. That was obviously the shares filling that gap that we had back in June at that level. So sometimes the charting works rather well. On to Pensana, which has also been in the wars of late, and here just the first signs of a turnaround, proper move through the 50-day moving average, and recent neckline resistance of 15.5. Above that, looking for the shares to fill that gap up to 18 3/4 pence over the next couple of weeks. RSI bounce, a double bounce in fact, off neutral 50. So if you are a fan of the shares, even for the stock to head up to the 200-day line at 22 pence by the end of next month may not be pushing it, but ideally we stay above that 15.5 pence level. On to what was the stock formerly known as Barron Oil, Sunda Energy, which I don't think is such a good name, but anyway, we've got a rising trend channel base, but the shares hugging the floor of that rising trend channel at 0.06 pence, and while we're above that, or at that level, then looking for the shares to at least head back up towards 0.08 or 0.09 maybe by the end of this month. Finishing off with Trinity, which has been bouncing quite nicely of late. Another day and another gap higher. Bear trap island reversal, looking for a minimum at the top of that rising trend channel from January at 69 pence, and hoping for that over the next few days. Very interesting that there are so many gaps higher there on that chart. Presumably not that liquid, but also an indication of a bit of buying momentum. The 200-day line also starting to rise, which is very encouraging indeed. That's it from me today. More updates tomorrow.